Federal Reserve holds rates steady while oil prices explode on Middle East blockade fears. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 closed nearly flat at 7,143. The Nasdaq Composite edged up 50 points to finish near 24,700. Meanwhile, the Dow Jones Industrial Average fell almost 200 points to 48,950. The Magnificent Seven had a mixed performance today. Traders treaded carefully ahead of a massive earnings night with Alphabet, Microsoft, Amazon and Meta all set to report after the bell. Energy was the undisputed winning sector today, riding a massive crude rally. On the flip side, consumer discretionary and industrials were the biggest losers as rising fuel costs weighed heavily on sentiment. Bitcoin showed resilience, adding over 1% to trade near $77,000. Precious metals stumbled, with gold dropping over 1% to $4,539 an ounce and silver falling 2% to $72. West Texas Intermediate crude oil surged 8% to top $108 a barrel. The Federal Reserve voted to hold its benchmark interest rate steady at 3.5 to 3.75%. This decision featured 4 historic dissents, making it the most divided committee since 1992. Policymakers are trapped between fighting energy-driven inflation and a slowing labor market. This hawkish pause is exactly why gold and silver took a hit today, as higher rates make non-yielding assets less attractive. The second major catalyst was a historic oil supply shock. The Strait of Hormuz remains effectively blockaded, and the United Arab Emirates announced a shock exit from OPEC. This geopolitical strain sent crude oil soaring over 8%, directly causing the massive rally in energy stocks while crushing fuel-dependent industrial and consumer sectors. Finally, the tech sector faced early pressure after reports leaked that OpenAI missed its internal revenue targets. This sparked fears about artificial intelligence monetization, sending shockwaves through semiconductor stocks before the Nasdaq managed a slight recovery. The 10-year Treasury yield spiked to 4.38% while the 2-year yield sat at 3.86%. The US dollar index climbed to nearly 99 and the VIX volatility index jumped to 24. Surging yields and a stronger dollar reflect growing fears of sticky inflation, making investors demand higher risk premiums. The CNN Fear and Greed Index plummeted from 64 down to 33, shifting officially into fear territory. This sharp drop implies that investors are aggressively dumping risky bets and seeking safety amid the chaos. Looking ahead, the market outlook is extremely cautious as Wall Street tries to balance solid corporate earnings against deteriorating macroeconomic conditions and escalating geopolitical strain. In the coming 7 days, all eyes are on the first quarter GDP advance estimate and March PCE inflation data tomorrow morning. We will also digest the critical April jobs report next week. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.